definitely that gets me back. Like today, I was actually short, but then my entry was right at the 5 CP at 9, right before 9:30. I would say 9:15. I was already short, and
Hmm.
9:20 move actually freaked me out that it's going to go up. So I cut that, and then I tried to be long, and then because that was over 7.76, 786, and I went long over the 15 CP and 5 CP, and then it, again I had to cut the my like long call because it fell more than 200 point dollars for me right away, and like waiting, and then again I've waited for it, and then I tried to do like go long again because it was holding on. It went down to 5 bottom, came up to I would say like it was holding on 5 CP again and made a green candle, and I made an entry because that's what I was looking to have a setup to go up. I had a green candle on volume 2, so I made an entry, and then it kind of retraced down. So I added one more because I was hoping that at 5 bottom it will bounce back again because I saw that there was triple uh, bottoms on that time on the 5 on the same range. So I added one more, hoping. I mean, that became an hope because that was a third one already was there, third bottom. So, but then it slided down more, and I was like 600 down, and that's when I kind of like left it I mean, just kind of left it and then waited for more time to trade it back to MES, and I did that. I made $100 to the 5 top from 5 bottom, but then again I shorted it from when it came back to the channel. But then again it just took me out again. So yeah, that's what happened.
Yeah, you're still chasing candles back and forth with no conviction of the overall direction or where it's going, and it's causing all those same little issues. We're going to talk about that a little bit today, but yeah, we'll dig deeper into that. That's kind of the same thing that you've been doing, but I guess it's a little bit more refined now. But we'll dig into that. What about you, Hank?
Can you hear me? Can you hear me, guys?
Yeah, I can.
Okay, cool. Okay. Uh, Today was a very good day for me.
Hmm.
I did short. I was hoping that it was short. I had a lean, so I did enter once, and I went out, and now I'm in Nasdaq micros instead of ES. All
Yeah,
right, I switched loyalties,
feel
so
comfortable there.
that's when. Yeah, it gives a good move for the
Hmm.
weight and everything. Um, what has changed in me in the past, I think so, talking to you guys and reading all the messages, the one thing that's now stuck into my head is until the 2 minute, 5 minute, and 15 minute are not aligned, and
Uh,
one of my one of the fibs that I've drawn is not hit. I usually try to avoid entering.
uh,
That's one thing. I'm trying to control my aggression, which was not the case before
Good, dude.
this happened. And you know this part, right? I was
Yeah.
running like a headless chicken, and I was always freaking out. But the moment you introduced me to the micros, it changed my perspective. I can sit down and wait more patiently. And if there is a loss, it's no more than 20, $25. And if it's profit, I try to take out at least 20, $25 or $30 per contract, so to speak. Today, that was the first trade. The second trade, I don't have a sharp memory like like how he went about.
Yeah, it's okay.
Uh, so I don't have the timing. What I did do was sometime during the day, I think so, the price shot up, and though I was sitting on a good 10-15 bucks per contract profit, um, I decided to hold, right? So I switched to a loss, and it went on to become a very big loss. But I had this one conviction that okay, 15 minute is still red. So probably 15-minute MACD, sorry, is still red, and it's definitely gone beyond my fibs. So the only thing I will wait for some time is wait for the tapping out of the price to happen.
Yeah.
All right. I took it all the way till, and I think so that was between 1 o'clock Eastern time, that's 12 o'clock Pacific time. That's when the 1 o'clock to it shot up and I started my red multiplied. But I kind of decided to hold, but I did averaging. I did one thing. I averaged in, and there
Averaged
was,
in.
yeah, I kind
Yeah.
of started
Made your way in.
yeah, yeah,
Yep. That's fine.
adding more shorts,
Yep.
adding few more contracts, hoping that it pans out for me. Now the hope kicked in, all right, because yes, I was beyond my 382. I was actually even on the 90%, so to speak. But then eventually the price did drop, and that flipped to a uh, $500 total profit for me, all right, on a multiple contracts that was in, and I got excited. It shot past my expectations. I closed it and I went away, and that was the end of it for me.
Good job, dude.
All right,
Yep.
yeah. So
You,
I
you're making good
I
progress.
I read somewhere the power of averages. I know it can be wrong, it can take me on the wrong side of, or it can take me on
There's
the
just a
dark side.
proper way to do it. You got to do it the proper
Yeah,
way, and it's fine.
yeah. I just waited. I saw it going up, but I knew it at a certain point that it has to tap out. And I had drawn a particular level, and it even went beyond that level, but it then immediately flipped back. That's what it gave me that conviction that the loss is no more happening. Now, if it goes up more, then I'm calm. And if it comes down, then
Yeah.
I will be good. And turned out good for me. The only good part was MACD had 15-minute MACD became green for some time, and but it went back there. That was
Good,
and one
man.
more thing.
You
At
had
any
completely
point of time,
ignored all that stuff a month or two
sorry.
ago, so that's good. I said you would have completely ignored all that stuff a month or two ago, so that's good.
Yeah. What if I was in the regular yes contract? I would have accepted the loss of 750, which is 500 or 750, and I would have walked away, done for the day. I would have DM'd you and ranted about
Yeah.
the stuff. See, what is giving me that I went to micros based on your recommendation, that's kind of changed my dynamics, how I'm looking at things now is
Hmm.
uh, A, I switched to micros, and B, I'm focusing on the 15 minutes a lot, because you've said that many times that 15 minutes it pretty much holds the key.
Yep.
So I focus on the 15 and 5 a lot. So I have a time think or swim chart also. Even there, I have a 15. Somewhere I found a 15-minute multi time frame based. What is that called? A lower indicator. So I'm kind of focusing on that also. Even on so all my indicators are mainly MACD, and that's what it is right now. So
Sweet.
that's it.
Anybody
And
else? How are you doing, Frank?
All right. Sorry, I had to mute myself. I thought I was I'm doing good, man. I'm doing I've just been taking it a little slower on days that I do not um I just don't got a lot of conviction in. That and
Yeah.
just trading the micros, right? So I rather take my losses on MNQ or MES, more MNQ because that's more what I trade. And then once I kind of either if I'm right, then I'm going to add to the position with NQ, and if I'm wrong, then I'm gonna wait for a pullback or something so I can, take my loss on MNQ and then flip back to it on NQ. But it's just got to be careful because it can be tricky at times. But
Yeah, you do a good job of like mentally keeping yourself in the right space and not letting yourself drift off into those bad habits and stuff. I like
it's
to watch
tough,
it.
man. Some days like I'm sitting on my couch and I can see like everything and I can hear it and I want to get up and trade, but
Mhm.
I just know me
Yeah,
from 11:30 to 2:30 is when I usually take my big losses. So I just need to not be here and trade, even though
yeah,
the market's running or going and everybody's making money. That's not when I do my best. I do my best from 9:30 to about 11:30, and then maybe about 2:30, 3 o'clock and on. But more
and
so
that's the
9:30,
game, dude.
11:30.
Knowing yourself, like you said it perfectly,
And
dude. For
and
people to hear that,
you do your best at the open. That's super impressive, and that's honestly
I do
optimal.
too.
That's optimal, right? Because then you make your money and you're done in an hour. So that's really
You know what I
impressive.
notice and right in trading the open, I don't always trade the open. Sometimes I'll wait 15 to 30 minutes for the opening ranges or the initial balance to set up. But when the market gives you back and forth ranges, I think it's easier to trade because even if you get in a contract or two of MNQ, let's say, and it drops 10 points, right? You're down $40. But if you add another contract there and you got the ranges where it's moving, you can still make money even though you're red. And I don't recommend this if this is not what you do and this is not the
Oh, it doesn't matter, dude. You're
Flowtrade
fine.
strategy, right? I'm just telling you my perspective, right? But so when it trades in ranges like that, you can trade it and catch it on both sides if you know what you're doing. The issue lies when you don't recognize that and you start trending in a direction and you keep trying to either find that dip or that bounce or I'm sorry, or that rejection that's never there and never follows through. But that's just me.
Yeah. So that's a good point that you say those is as far as like the flow trade, system or objective or whatever, there's a significance behind it. And it's not, this is the only way you can trade. The point is like you, for example, you have trade setups that you have dialed in and you know them well. And there's different kind of trade setups, etc. Which a lot of people try to do, and a lot of people can't do that successfully, right? They just because they don't come across the right trade setups, they don't have the right person teach them, or they don't stick with something long enough. And those are just like basic, different, specific trade setups. The difference, what I wanted to do for myself in my quest and like developing everything or just trying to find is I wanted to be able to know what the market was going to do for any size, right? Not just like I know a couple trade setups, and I'm going to take these trade setups, this and this and this. I wanted to be able to read the market like from a 1 minute to a monthly and everything in between all of that. And so that's typically what people are missing. And so that's kind of the reason why I like to give that to everybody, because it's a foundation which you can trade off of, right? You can trade futures, you can trade Forex, you can trade options, and you can do it for any time frame down to scalping for seconds or predicting, a 3 or 4 month swing. And once you have that ability and you can read the market and pick it apart that way, then when you take those trade setups that you have, that a lot of people try to learn and stuff, and those become 10 times more powerful. Like you can execute on those twice as strong. You have more conviction on them. You can see them even deeper than, the regular learning curve on them. And that's the only purpose. So there's not really, you can't trade that way because that's not how we trade. I know I've come across like that before in the past, but it's not the point. The point isn't, that's not what we do. It's the point of just being able to give somebody something that they actually can sit down and pick the market apart better than most people out there, if that makes sense.
Absolutely. And I mean, I use and I've told you this, right? But I've started implementing a lot of what you guys teach in my trading now,
Mhm.
even just in referencing, right? Like, so on a side screen, like I have my daily bottoms and weekly or weekly channels and daily channels and
Mhm.
so on, that I use those for reference now all the time too. And I think one of the biggest things is just constantly drawing my fibs, even because it's fractal, right? So
Yeah.
you can draw it on a 5 minute, a 1 minute, a tick chart, whatever.
Yep.
And once you get used to them and you get good with them, you can eyeball it and know, hey,
Yeah.
that's about a 50 or a 618.
Yep.
So I still
100%.
draw them just because I like to get in the habit, but you already know, hey, when it's there, this is where I'm going to look for that bounce or that rejection based
Right.
on what you're trading, right?
That's magic of it too. I'm
Yep.
glad you said that. Yeah, you can just start to see the things, kind of same line with like a trend line, and why I don't try trend lines, because you can see a channel or a trend line. You don't really have to draw it there. I just draw it, to show somebody else. But yeah, you're dialed when you can just look at things and know what's happening like that. That's awesome. So let's talk about that a little bit. That's kind of what I wanted to get into, since we've kind of covered, I think Grumpy's in here. There's there's a couple people missing, but that's all right. We've kind of went through like the foundation of tools that we use, and the point is understanding how they each work, individually, just like the fibs you're talking about, just like the MACD cycles, how they work individually and understanding their strengths individually, but then how to put them all together so that there's a main picture view, and how that's seen. And one of the hardest things for people to wrap their head around is how the primary cycles and the secondary cycles work. And that's the big time frame strength and the lower time frame strength, and how price reacts to those. And we've had a good example the past 2 days of this with the primaries. And so as I was watching this, I thought it was a perfect time for us to kind of recap and cover and go over it. And there's some things from this that you need to put in your bag as well, that I tried to, spit out in the daily cookie, but it's, a longer explanation than that most of the time. But so can you see this TD Ameritrade chart?
Yep.
Yes.
Okay. So this is the MACDs from the primaries, 4-hour, daily, weekly. And this process, you guys should have been watching this enough now to understand, this flow and the lower time frame flow, which would be 1 minute, 5 minute, 15 minute, and how the 1 minute or the 4-hour cycles up and down a lot more than, the 5 and the 15 and whatnot. And how right now, currently, the strength was to the downside because of our down cycle on the daily. We had the slope on the weekly, so we had that heavy upper time frame strength, but we can still have a short-term counter move on this 4-hour, and that's what guides us. That's how we know there's going to be a temporary counter move on the main strength, and we are able to pick that up from the 4-hour. And sometimes, when things are really, really fast or really finicky, we can use the 2-hour to give us a little heads up. But the 4-hour is telling us when we're taking a break and when we're going to counter move. And that's what we did on the push up yesterday and the push up today. Those were counter moves. And so what happens to traders a lot is we get caught up in the price, and wherever the price is going, that's the direction we're going. And so all of a sudden things are bullish, and we're following price running up, and we're going to break out, and this is going to happen, and this is a possibility. But none of those were ever a possibility, because price will not sustain a counter move against the daily cycle and a weekly cycle slope down. It will not turn around and run away the opposite direction. It does not happen. It might happen for a day, might even happen for a full strong day, but after that, it's going to retrace. And these are things that like are not naturally intuitive when you see them happening, but if you can condition yourself in your brain to start understanding that and being able to read it, then it puts you ahead of everybody else. And so when I see these two, when I see this and I'm setting up in the morning and I see this, I know the strength is there, and I know that's where we're eventually going. So when I see a counter move up in the opposite direction, I'm not trading it aggressively because anything could snap it back at that point, or any top or whatever. I will trade the counter move. And when I'm teaching people a lot in the beginning, I tell them not to trade the counter moves because, you know, it just lowers the probability, but you can do it, and I do it. So I'm conservative though. But when I'm not conservative is when we get to levels, big resistance levels, and then this 4 hours starts to turn back down to join these. That's when things get aggressive, and that's when I'll hold longer and condition through all the different scenarios. And so the scenario, as far as this big picture on ES, is two things that I wanted to discuss. One is me and Blonde Broker, I don't know if she's in here, I've had a
Yeah, I'm here.
bearish target on ES for a while, and Styles too. He has a bigger one now, but we've had this 44.60, 44.30 target for the wave or the leg that we're on, and everything else that comes together. So that was still lingering. There's an important piece to that. When you have a big target like that and a huge level, and we test it, we come down and we hit it and we test it multiple times, when that level breaks, that's going to become your new pivot point, your new fulcrum, and that's going to get tested for resistance, and that level is going to be what decides whether things change or not. And so whenever I see that on the big picture, I always take fairly heavy trades on those spots because of that reason. Does that make sense? Are you guys with me so far?
Oh yeah.
Okay. And so the other thing is talking about using all of our tools and piecing this together. If I'm piecing all of this together with our legs, with our daily breakdowns, falling out of the channels, our fib targets, then all of you guys should have been on the same page as far as what we were doing the past couple of days and what our targets were. I didn't. A lot of people in chat were bullish, and a lot of people were calling targets and reversals, and I didn't really want to get into it with everyone because I kind of wanted to see where everyone's heads were at as far as like what they were reading, what their understanding, and what their follow through was on. But if you guys are putting everything together properly, then you guys should have all been in the same situation as far as what we were doing, and all of our moves to the bullish side were opportunities to get short. There were counter moves that could not sustain for longer than a day. And usually they don't even last a day. And so the point of this whole thing that you guys are learning is to be able to take those trades, because who wants to sit around all the time and be in and out of a trade for $100 and then $200 and then $30 and then, oh, fucking after all those trades, I have $600. I know that that's good. And that's a stepping stone of progress. That's where you want to be at. But I know that's not your goal for trading. It's not, because it's just silly if it is. It's a good place to be. It's a good place to get to and then move past. But the only way to get past that and to be able to take longer swings and heavier positions, if you understand the whole picture and what's going on, and understanding the smaller, minute counter trends and stuff inside this bigger move that are simply irrelevant. As far as if you're in at the proper level and a big level and you're taking a bigger trade, those other moves are irrelevant to what's actually happening.
Josh, could I recommend something?
Yep. Step in whenever you want.
So when we started to lose the dailies, I entered into a long SPY call and I just held it. And then I day traded it. So when I saw we would bounce or we would be pulled down, I just kept my long, but then I play, the weeklies on the short time to play the different moves throughout that daily. Because if we lost the daily top, I knew we were headed to the daily bottom. So I just had to buy enough time to hold it for that entire move. So I have an umbrella, and then beneath it, I have smaller plays, if that
That's a
makes sense.
really good point and a good way to do it, and something I actually don't even talk about. So I do that in a different way though. I do it with futures. So for example, today I had my big put position on, but some of the counter trades that went to the bull side, I would trade with futures, which is essentially the exact same thing she's doing. And that's ultimately where you want to be, because then if you're doing that, you understand the entire picture. You know where the big picture move is going, you know what kind of range you have in the opposite direction, what kind of trades you can take in there, and you're in complete control of the market conditions, which is a nice place to be. There's no stress, there's no wondering, there's no guessing, there's no, down in the red and hoping. You're just along for the ride on what's happening.
Also one thing, like Josh said, I just want to make sure like people understood this. It's knowing the conditions to know when you can let it ride like that. I think a lot of people try to take really big trades when the conditions don't warrant it. Like if the primaries are not aligned and we're going to be in a range zone. So just make sure you understand that he said when the conditions are right for that. That way you're not trying to push to big targets that aren't realistic at the time.
And that's going to be exactly what happened this morning, which, that was caught me off guard. I did not expect us to push that hard up at all, but they were trying to bring some people in, and a lot of you caught that, which was good. I didn't, but this move, even though it's aggressive and everyone, not everyone, a lot of people in chat, even some veterans, were ready to get long and we're reversing. It's, I'm going to repeat myself, it's impossible. It's impossible to reverse and run in the opposite direction when the daily MACD is down and the weekly is sloping. It is impossible. It cannot happen. It can happen, it can happen like this briefly, but it cannot be sustained for a reversal. The process that I talk about, termination phase, when we're changing directions, it's going to be up and down, up and down, up and down. So everything catches up. And then finally on the last one, we're going to take off. There's very few times in the market are we going to just have a V bottom on any time frame and rip back. It happened, more often than normal during, by the dip phase, but that's not normal. There's rarely V bottoms.
Hey, Josh.
Yeah.
The only reason I took calls this morning too is that I remembered the last few Fed minutes that we get this green push at the beginning for about 30 minutes to 60. And then we either chop or drop the rest of the day.
Yeah.
And that's just what I remembered, because I got caught in it last time and bought calls and then had to hurry out of them. And so I was prepared for it this time because I knew that was the pattern.
There's also, when laying this out, it's a baseline for people who haven't found consistency or haven't found boundaries or rules or guidelines to trade by. When you understand all of this, then you can start to move outside of it and do, stuff that's not on the baseline of it, because you can read everything, exactly what she's saying. She can take a counter move. She knows the whole picture and it's not going to adjust, which is different. And so when you guys hear people doing that outside of, kind of what we're laying out for people who are new or just trying to get a system in their pocket, you have to remember that there's things are going to expand beyond this, the more awareness you have as far as how price moves and stuff. But back to what I was going to say about this. So we have the primaries heavy this morning, down, and this initial, we even had the 30 down. I think we had the 5 down too. Did we have the 5 down in the morning? Let's see.
At one point.
At the open is what I'm wondering. So at the open.
Not at the open, no.
Yeah, at the open. No, 8:30. Yep, just about. It was just about to cross up. So yeah, so at the open, that was there in the 15. But this aggressive move, that ripped, you know, that was as explosive as it gets for a counter move. It had everything in it. Those cycle points scooped it up, which is, you know, I want to get Trax to talk about because it's another nice addition to things. But after that, when the big picture strength finally settles in and it's like, where are you going? Nope, you're not going past, you know, this target level that we busted. The strengths to the downside, it's not happening. Once that strength takes over, we can't completely break down right away because we're fighting that secondary strength still. So still the patience. That's why, you know, Kirby was getting a little jumpy this morning on the right level, and he took some, you know, crispy trades right off of the turn, but he was early because of this. And this doesn't just break down right away. We had to wait for this amount of time for things to fold over. And so the reason why I'm beating this up is because this process and how things develop and undevelop and unfold, it will slow you down in your trading. It will slow you down from just jumping into trades and trading candles and finding a candle and chasing it. If you're processing this and how it unfolds and how everything works, if you're processing this rather than looking at the candles, you're not going to just throw your money at something and just hope it sticks. You're not going to just see a candle, throw your money at it, and hopefully this one runs away. You're gonna process your entries and whatnot. And so back to the bigger picture, this is my short entry this morning.
Yep, so nice.
Which was early, but also the reason why it took that is what? Because that's the level. If that 4-4-6-5 breaks and we start pounding through that, well, things are going to change. We're going to have bigger range, and we're going to start maybe working on getting things to curve up to the upside. So this is my entry level early and my stop point. If I got any meat through this at all, I would have been out right away. And so also reaching for the target, I'm not dealing with any of this. I'm not even getting to the 5-minute mid and taking my profit, which was like $1,500 right there, because that's not my target. My target was way down at the target me and Rebecca have been talking about for a while. And so I didn't do anything after this. I didn't even watch the price on this. I took some counter or some futures trades throughout the day, but I just let it play because I've seen this process happen so many times, and the same thing that we're talking about, and we talked about it a few weeks ago, it's the same thing over and over and over. Like, there's no doubt in my mind in how this works, so there's no stress on me, and I can go 50 contracts right here and just deal with it and let it work its way down to the bottom. And that's what where I want to get you guys, and where I want you guys to have understanding, so that when we have days like this, you know, you guys, a lot of people had some good days, but I was actually kind of surprised at the amount of people that thought we were going to go bullish and we were just going to run up. And so I was like, shit, I better discuss this again and understand the importance of the big time frame and how this is controlling everything. Do you guys have any questions on that?
Also, one more point. I was too caught up on 4-hour bottom, thinking that this is going to be the level and no way it's going to crack down and they are going to push down the
But
price.
why did you think no way?
I mean, most because early in the morning, as I mentioned, that it had already bounced 3 times from so. I
Yeah.
thought,
Look at the daily. Look at where the daily was.
I was just gonna
pushing.
say, yeah, and that's where that bigger picture stuff has to pair in with everything, right? It has to. You can't just isolate your decision off of one time frame. If you're gonna isolate your decisions off of one time frame, they have to be really quick scalps, and you need to use 1 minute or 2 minute precision in there. Otherwise, if you're not taking tight scalps like that, then you need to see the whole picture, because there's too many time frames intertwining and they're going to jam you up.
okay.
And the other thing is, so let's see, what is the start of today was right where?
To the
Oh, right
left.
here, right here.
Yeah.
Okay. Does your trading view look the same as this right here?
Yes.
Where we're in and out of the fives right there?
Yes.
And I'm just gonna assume, since you didn't bring it up, that you didn't check the dailies, right?
No, I was focused on
Yeah.
2 minutes and 15 minutes only.
So that's the other thing of remembering the few of the factors that play into these. One of the main factors for the ATR channels, right, is when we break a channel, we accelerate. So it's not overbought like Bollinger Bands is going to come back or anything like that. When we break through one of the ATR levels, the strength increases. And so I always have to have that in my mind. And if I see on the daily that is your daily at 4465. Rebecca, do you have it up on ES?
For what, trading view or thinkorswim?
Thinkorswim. Pretty sure it's 4465. No? Nobody?
I can look at trading view, but actually I can pull up thinkorswim. Give me 1 sec. I forgot that I even had thinkorswim.
Hey, Paul, Kirby, one question. When
Yeah.
Bear mentioned that around 8 o'clock in the morning, it bounced at 3 or 4 times. One of you guys said that, did you care to check the dailies and the weekly at that time? Were you talking about Kells or MACD or both? I know
Oh.
it's a dumb question, but still.
No,
Kelts. There's
both,
no dumb question.
both, really.
So that should be in your preparation. That's what I was talking to you about. So preparing for the market, this isn't catching me off guard. I already am going into this going, there's the daily 1.5, right? So even though it hasn't broken our 2.0, we have to remember that the original creation of Keltner channels, ATR channels, is just a single line. It's just 1.5 ATR. And that's the original breakout point. So that would be right here. So right here is we just broke below the original bottom. The reason why we use a 2.0 as well is because it didn't, over time we realized, it was low probability, like 40%, 30%, we'd have small breakouts. It didn't really break out until it was past the 2.0. But in my mind, I still understand that, and I still have to remember that. So as I'm looking at this 4-hour bottom, well, I already have acceleration on the daily. So my natural, logic isn't going to be, we tested this 3 times, because we really haven't. We tested the 2.0, but we've been violating that 1.5 this whole time. There's not really anywhere that I see any significant support being held on that 1.5. It's just cutting through it. So 1, I have acceleration to the downside from the daily, and 2, there's no support here. This triple tap right here off this, that's like, dude, we're not going anywhere. That's it. The daily and the weekly, they have to be, you have to know where they are. They're the strongest levels on your charts, unless you have the monthlies on there. But it's like the difference of, the 4-hour is like, some strong plexiglass versus the daily being some bulletproof, 40-inch glass. That's the significance in the technical levels on those charts. Everyone hip to the flow and understanding the process for the primaries and stuff. Any questions on any of that stuff?
Tell me this part, right? Paul, I know, again, silly question, but for every MACD or something like that, I'll have to create a new chart or something like that, right? So which means I have to be flipping between like multiple charts for looking at MACD.
Yeah, which is the biggest pain of ass of everything, right? Looking at 1 minute, 2 minute, or 1 minute, 5 minute, 15. So
Yeah.
that's why Trax made the cycle point thing, which has the table. Right here.
Mhm.
This tells you when the slope is green or red, and it tells you if it's crossed and what price it's going to cross at. So I don't have to go look at all of them. Although I like to, I feel your pain on that though. I know it sucks that you can't have all of them, which is primarily why I trade off of a 1 and a 5 minute chart during the day. That's when I mostly am staring at. I already know ahead of time the 4 hour, the daily, and the weekly. It's not something that I have to go check on during the day to see where those levels are at, because they don't change minute to minute, right? Like they're established. I know what's going on with them. I know where the strength is on those. So the best thing you can do, which this is available for TOS, this is available for TradingView and the desktop. So there's a table version for each platform where you can avoid that, Hank. Roger that.
What was that?
Say,
And what's
Josh.
that? I'm sorry.
Yeah. Hey, this is my first session,
Uh-huh.
and I'm trying to catch up. I've watched the other stuff and whatnot, but is there somewhere I've not been able to actually see or read or watch or learn anything about the cycle point stuff? I've tried to look through everything in Discord that I could find, and I've not been able to.
Yeah, there's not.
locate.
So it's a newer invention that Trax is working on this beginning of the summer, and he's been tweaking it and refining it. And so he hasn't done a video, and I haven't really dug into it because I would rather let him. I didn't use it for a while he was like perfecting it, and probably over the last 60 90 days maybe is when I've really started implementing it. And so what I'll briefly just tell you is basically what it is you can probably not see my green line on, or the gray line on there. Let me change the color real quick. So basically there's all the settings in the cycle point for all the different time frames, whatever ones you want to list up there. The first one is whatever that one is what's going to plot on the chart. And so all the cycle point is a line letting you know where price has to cross, or where it's going to cross for that cycle to change for the. And so for here, this is the 5 minute MACD cycle, right? And you can see right here the candles start going under it, and you can see it crosses down right there. So it's just letting you know how strong this is, how far away it is, and price will absolutely come up to it and reject it and say, okay, that cycle's not crossing, or same with the downside. I don't like Trax or someone else who can get in there longer. He's going to do a class on it during the week one day. I think he's just been waiting, and so I don't have like a ton of experience with it, but beyond what I just told you right there.
Can I say
But it's
something
been helpful
about it?
for me. Yeah, go ahead.
I think it's a lot better to use cycle points as like a confirmation for entry, as opposed to trying to get a bounce off of a cycle point. So if we look at that move down.
No, that's not a trade entry.
Yeah, that's what I'm saying. Like, I see a lot of people trying to take it as like, okay, we're hitting the 5 minute cycle point, I'm going to get long here or
Yeah.
whatever. I think it's better like this morning, or not this morning, but after we had that initial move down to the 15 mid, we were sitting at the 15 mid and we were at the point where the 5 minute and it's like 15 cycle points were turning down right as we cracked the 15 mid, and you could see that we were cracking those levels. So I think it's better to use it as like, okay, we're about to get strength, not like, okay, I'm going to take a trade because we're hitting the 15 cycle point.
It's a good visual for
Mhm.
the primary and secondaries, which was the purpose of it. And like he said this morning, we popped up over all the different time cycle points. You know, Price got over all of them. They had, you know, we're all tied together, just scooping Price up. So he was ready for that liftoff this morning, which I wasn't. But based on, you know, all the cycles scooping Price up and being underneath it, it was boom, it was ready to rip this morning. But he's going to do a video on it soon. You know, he's obviously more intricate with that kind of stuff.
I love his alerts that come with the cycle point in TradingView. It's a great heads up, I would say.
Yeah.
Yeah.
Need to get him to move this one to the bottom left corner, dude. Bottom upper right corner is like the worst possible spot. You could have it. What were you gonna say, Jake?
I just wanted to ask where I could find that that indicator with the MACDs up in the top right corner, like you were just talking about.
Yeah, we're gonna get have you got the desktop set up, downloaded yet?
Yes.
Okay. You should just be able to add it as cycle point. You'll see it. And then there's I don't know if the checkbox is for show table is automatic or you have to check it.
Oh, I got you. All right. Sorry about it. Got you.
Anything else on that before we discuss the absorption chart that Bear? Did you save that, Bear? I deleted it out of that room.
I think you deleted, but I can get it back. The chart and the charts that I was asking yesterday.
Yep.
Let me get it for you.
Wait, it is absorption?
Not. But I can understand why you're leaning towards that. Gonna go a little ham on the flow index here since we haven't really been going too deep on it. And I can't believe kids already started school again, dude. Summer went by fast.
My kid started almost 2 weeks ago already.
Really?
Yep.
Yeah, Arizona and Texas start early to avoid that heat, probably. Yeah.
Yeah, it was 114.
Oh my God, bro. But is it humid there or is it dry?
It's dry all the time except for right now. It's monsoon season, so
It's all thick out.
yeah, so it'll get humid during this.
So I just tagged you in the trade room for that.
Okay.
Shorts, yeah.
Perfect, dude.
Also, while you do this, could you kind of define what absorption is?
Yeah, that's what we're gonna go over some different dude, I don't see it. I understand. Oh, got it. Sorry. All right. So
And I'm going to tag you for another one in the morning today, where the absorption was kind of like price was up and the indicator was down. So I'm going to share this screenshot again. Similar but opposite.
Give me 1 second. I'm making a little clip of art or a clip here. Guys, chart.
Yeah, I just reposted it for everybody to see that.
Okay. All right. So there's like a lot of different ways that people will try to read this and view it, with depth of market or not. But the point of the flow index is just how simple it makes everything to read as far as buying and selling. Can you guys see this chart?
Yes.
Yeah.
Yeah.
Okay. And so this is like the evolution in how you're thinking and how you approach things once you have like tools as a foundation, right? Once you have all these tools as a foundation, you know how to use them and execute and how they work, then you start to peel back the other layer that's happening, and that's what kind of buying and selling is happening. What is there? A big seller? Is there a big buyer? Is there, are they just trying to fill a low volume node? Like what's actually happening behind that? That's the other half of things that we're going to get into. And it's always been, a particularly difficult thing for people to read. And it's primarily been, depicted from volume profile. That's what everyone's preference is. Everyone has the same logic around volume profile and how to put it together and what it's telling you behind, what's telling you beyond price, which is great, but it's still not forecasting anything for us, right? It's not telling us what's going to happen in the future. And so that's why I tend to lean on this over that. And I want something that's going to tell me what's going to happen coming up, not what just happened and what they just did. And so there's multiple scenarios. There's absorption, there's soaking, there's exhaustion, there's liquidation, traders being liquidated. I don't know, there's a bunch more, and I know I said I was going to make some of those charts, which I will, I promise. But let's discuss absorption and what that is. And what that is typically there's going to be, a buyer or a seller that's huge. It's a big buyer, a big seller, and he's out there absorbing whatever the majority is trying to do, right? I have a position, a huge position that I want to unload, so I'm selling it piece by piece to all these traders who are buying it up, that chasing the market. They think everything's going up, and so they're chasing price and they're all buying, just retail's flurry of buying, and I'm just sitting there with my limit on 4,500, just unloading to every single one of them. Some at 4,500, some at 4,550, whatever, and they don't have a clue. They're just buying. I just unload onto them, right? So that's I'm absorbing what's happening. Does that make sense? So I'm absorbing the buying that's taking place. And so if that's the case, on a 1 minute chart, this is not the case of what's happening here. What that looks like when somebody is absorbing is this sideways action right here. that will continue to happen. The algos will continue to climb and to continue to go up. They'll continue to have buying. And this price will continue to go sideways. So it's not actually divergence that's happening. And that can get confusing because price isn't going up, it's just going sideways. And as algos continue to buy and retail continues to buy, there's somebody in here who's just unloading everything to them and keeping them pinned right at this level. And what happens when that happens is, as soon as I need an actual chart of absorption so I can show you guys this. If somebody knows what that is, can you grab one if you have one, Kirby?
A chart of what exactly? Just Flowtrade? Is that what
No,
you said?
just see if you can find some real absorption so that while I'm talking about it, we're not looking at something different.
Okay.
While I go over this. So this scenario right here would have been that if algos continued to buy. This is what the sideways looks like. This is what positioning looks like for that person to absorb all the buying. But it wasn't. This is simply just in line with price. We're down, we're up, we're down, we're up, we're down, we're up. And it's just ranged in. So this is simply HFT, just programs, just doing whatever they're doing in the morning, etc. Why I was highlighting this is nothing to do with this. It has to do with the higher high or the lower lows not being made. And so right here, this high, and so this is how, so another form of action that's happening is exhaustion, right? So there's buying taking place or selling taking place, and then it gets exhausted and it stops at that point, and just there's nothing else they can do. They're all exhausted, they're all spent, and that's all they got. And so how do you read that? And so there isn't a great way to read it besides this right here, which is fucking spot on. And whenever we have double tops or highs that the programs continue to not drive beyond, then that's exhaustion, right? We pump and we're driving, boom, we're tired. Price cannot go anymore, right? Now, the second we exhaust out at that previous level, what does price start to do? Starts to fumble. And every push, a little push there creates a lower low. So again, we have another double top here that created a lower low on price right here. Dumps again down to the same channel. Starts to climb up again. Taps out again. Over and over. And so when I see this happening, we can't break a new high. We can't break a new high. We keep getting lower off this. The channel keeps weakening. I know the buying is exhausted, right? So when I'm reading this, the buying is exhausted, and we're also at that 465 level. We have the primaries down. This is what I mean by tying everything together. So this is the final piece that triggers everything. We have the big picture that we evaluate. We have our levels. We have the direction that we're going. And now I'm reading the algos, waiting to decide what I'm going to do. And I see them absolutely exhausted. I see this is not going anywhere. They're not making a new high. It's just a matter of time before this breaks down. Okay, I'm in. I don't have anything else to think about. I know what's happening here. And so starting to understand the algos, flow index, and the whole picture beyond just, okay, they're buying, okay, they're selling, okay, there's divergence. Yes, those are the three, primary ways to use it and are effective, but this is telling you so much more beyond that. It's not even funny. And this is a perfect example of exhaustion. This is telling you buying is exhausted. And so now you take that information, the buying exhausted, and pair it next to your technicals, and you're going to operate at 100%. You're trading with perfection. You actually know what's going on behind the scenes. There's no guessing. There's not programs bending you over. You're hoping. You're in control. You know what's going on. So this is exhaustion, Kirby and Bear. And it looks the exact same way to the downside. The other thing that happens with these channels is what? This tells me the process. So if I have a channel here, every time the algo gets to the top or to the bottom, I know that that's going to be the top or the bottom of this channel too. So that also helps me execute my trades, etc. And then when this breaks, I know what's about to happen. We're about to break down. And so that's the second part of the read to it.
So,
And so
the chances were that it could break up also. Is that correct?
what?
Like upper band, my question is the chances were that it could break upper band of that uh, indicator and the price will start moving up.
Yeah.
So
There's a possibility for anything, right? Like anything can happen. The logic behind it though isn't what that's not what's it's telling us though, right? So we tap out on this high, the same one previously from the previous day. And as soon as we do, price instantly fades. And every time we tap out there, it's fading right away. That's telling me there's no strength, right? If we're gonna be breaking above, there might be at the end of the day today, an opposite example of this. Let me check in a second. But if we're going to be strong, the buying's not exhausted, and this is a channel reset, and we're just going to break out, then price isn't going to be fading right here. It's going to be sideways, and it's going to be poppy to the upside. All these moves to the up are just going to be boom. It's going to be ready to break out, ready to break out, ready to break out until it breaks out. It's not going to be fading like this on every push up. Does that make sense?
yeah, yes.
Okay.
Hey Josh,
It does-
there's some charts on absorption in the small group lab.
Yes, that one's perfect, dude. Good find. Yes. So do you guys see this?
Yeah, I see what you're saying with the chart Bear showed. It wasn't really buying. It was just kind of
Right.
in
They're
line
not going to
trade, right?
continue what they're doing, continue this net selling while price goes sideways. If they start to go chopping with it, there's no the point is you're seeing a seller or a buyer, a big one, and you're seeing him working against everybody, right? That's the theory behind it typically. Yeah, there's more than one often, but sometimes it's just a monster that's sitting in there, and theoretically that's what you're looking at rather than them just sideways. I need to save this chart. This is a good one. What else we got in there? Tesla, yep. Continued. Is this current?
It's old.
Oh. Yep. This is the read without flow index, right? And this is what most people will use or try to use. The other possible way for or the read on it is using delta. You guys have questions about that?
No, I'm good. I'm clear about it now.
Okay. So there's exhaustion, there's absorption. There's also soaking, which I haven't heard in a long time, but the reason I remember it is because Apollo said it the other day. I haven't heard that in a long time, but I think soaking is a little bit different as far as so absorption is typically a big buyer or seller is the theory around it, and soaking is the same principle, but it's in general, multiple people are doing it, I think. I haven't heard that for a long time. I'm gonna ask him what he means by it, but essentially you don't even that doesn't really matter at the end of the day which one it is. The point is you see buying, you see sideways, you know what's happening, or you know what's gonna happen as soon as when I guess I should have said that too. As soon as the buying that's being absorbed, as soon as the buyers are done and they're completely absorbed and that turns back down in the same direction, then price is going to accelerate really fast. And so that's what you need to be looking for. It's going to slingshot as soon as they're done. And that's good. What else? Anything else you guys want to divulge into?
Yeah, if I can, if you don't mind, Josh.
No, whoever's got questions, just bring it up.
Okay, so today, if you look at the SPY towards the end with the flow index, it showed divergence at 2 different points. And as I'm just learning to use this tool, you know, I saw it as a point to go, most likely to go along, that the divergence would work out, or you know, and it didn't. So I'm wondering how should I be reading that it didn't, that the divergence didn't actually work out.
Let me see. So
it was
SPY.
SPY on 1 minute.
So right here, these little guys, or this one?
Yep.
Okay.
Yep, right there. That's it.
Yep. Okay. So first, don't lean entirely on the divergent scanner, because this is a beta setup. Although it's accurate as hell, there's going to be some discrepancies in there. So don't entirely rely on that. It's going to be updated with the new web version to more accurate. So that, first of all, I don't think I ever told you that. Second, let's take a look. So were you looking up here? Sort of?
Yeah, I was looking, you know, you
Okay.
can see where it was,
Yep.
let's just say where the green on the first one that you were just pointing at there ends,
Yep.
right? And it's still cycling up, it looks like, as far as the index. And you would think it would divert out till about the 442.50-ish. I'm just, you know, yeah.
Slow down. I'm gonna tell you a good tip that Bruce used to do. Okay, so we're moving up here. Price is kind of, you know, whatever. Then price declines right here. So this little divergence right here actually trades out. But this decline, they're selling still until about right here. Then this entire thing starts to shift up, right? Into buying. So what I recommend, because I can see why you saw this, especially like just getting used to it, because without peeling it apart, yeah, it looks like from right here, it's net buying for the most part, right? Like,
Yeah.
And if this was a 15-minute chart, I would treat it different. So on the 1 minute chart, when you're getting used to it, and if it's not obvious, then talk yourself out of it, right? This is what Bruce used to tell people. He tries to talk himself out of there being divergence rather than talk himself into being divergent. So I'm gonna check all that. Oh, fuck.
And also that green block came in right before the stock, the price starts slipping down. And sometimes it gets me that, that are thinking that, oh, people are going to go long now because lots of big buying coming because the green shadows, and then it slips down. So
Yeah, so don't so let me clarify on this. This has nothing to do with buying or anything. This is our first attempt at being able to technically put down a scanner that could visualize the divergence that we created that we see. So don't get caught up in this. Remember, this is beta right here, beta. It's a guide, and it's usually, you know, pretty accurate, but it can be wrong too. So it's more important that you know how to read the divergence yourself in the first place. Your read on this is like, it's good, dude. Like, this is, you know, from a glance, especially if you have a smaller screen or whatever, you know, this looks like net buying from there. Like I said, on a 15-minute chart over periods of days, then you would be right. This would be overall net buying. We would have a bigger divergence. On a 1-minute chart, things are more in sync, right? So this is in sync, this section's in sync, and then this section's in sync. So as this continues to buy the whole time, these dump downs retrace, and there's the divergence. But so a few things. Let's talk about this. One is, this is not your leading indicator. So this is not making the decisions for me. I'm not grabbing flow index and executing trades because this told me to. This is taking our tools, the indicators, the levels, and improving the accuracy and making it right or wrong, right? So the other thing that would avoid you from this is the cycles, right? We're in a heavy downtrend today. We have those primaries down. So any move up is a fight against that strength. And at the end of the day, these things were aligning to go bearish, to dump. And we were kind of waiting on that. And so if that's leading you, if that's leading your, you know, kind of your bias, like the wind is at my back in this direction, and then this is also going to catch up, and we're going to be strong to the downside. I'm not going to be looking at this going, okay, I'm going to take this up, because, you know, that's against everything, even though it's, you know, a little trade there, which is for $3. Or $2. It's still against it. Yeah, you could take that if you wanted to. But my point is using those other things so that you see the whole picture. That's what you're going to keep hearing me repeat and beat down, because it's what's lost between successful retail traders and people who try and use tools and use this tool and use this tool, but they keep failing, is the picture and the trend, the bias, the overall direction we're going is critical. You're making decisions that are going with that direction, then the tools work in that direction, and you don't have mishaps. And so focus on that right now, and then having divergence confirm. Also, dude, shoot me this. Like, if you're thinking about taking something, you're like, does this looks good, I want to take it, then I'll break it down with you, because that's a much faster and least expensive way to learn than, you know, learning by mistakes, which is the only way to learn in trading. But you can learn by having a mistake of presenting the trade to somebody and saying, no, don't take that, rather than taking it and learning that you shouldn't have took it. It's has the same effect.
Post them in chat too, like in the trading floor, like people will
And
help,
if you're not comfortable doing that, which I encourage everyone to be, because it's not a chat room full of people who don't care about helping. And if you are an asshole, you'll get kicked out of the room. But you can send it to me too. Like, I don't mind during the day, like when people send me charts and they're like, hey, I want to take this. Like, I would rather be able to help you make a great trade than hear about you not, you know, losing money. That I hate that. I don't want people to lose money. So
Okay.
send it over. Anything else? Anybody else? I'm gonna put together a sort of a review, like test sheet. for everyone that's been in the class since we started. And as we go into the week 6 and 8 and stuff, because we're going to start talking about, volume profile, harmonics, time cycles, the wave theories. But honestly, and this isn't offensive to anyone, not everybody's going to be going to that class, because it serves no purpose for you if you don't have this first part put together and bound together. It's not going to benefit you. So it's not for me to be, an asshole and say, oh, you're not good enough. It's just that I'm going to start over. So there's going to be two days a week. One days we're going to keep going into week 6 and 8 and beyond that. And then the other group is going to start over at week 1, and we're going to go back through everything again. And so if you were in this group and maybe you're not ready to go to the next group, but you don't really want to do that whole group, maybe you can just pick up some parts that you left off, or we can work together, and then you can end up in that group. It's just, so it's not to be an asshole or whatever. It's to help you, I promise.
Can I ask
So Josh,
a question real quick?
to recap, since it seems to be a little bit of an open at the moment as far as forms.
Yep.
And again, I know I'm new, and
No, you're fine, man.
Okay, I apologize to those that have been here for a while. But so if as I'm hearing from more so tonight, kind of seem to put some things together, at least for me, will be your first thing you're going to look at is your MACDs, and you're going to find out on the primaries what are we up against from the primary perspective. Then from there go to the Celts.
Yeah, so you can do it. You can do either of those in either order, but this is where it is. Big picture. So you're going to look at your big picture stuff, right? Your Celts and your primary cycles, which is MACDs. You can look at MACDs first, or you can look at Celts first. Doesn't really matter. You're just looking at those first, so you can get an idea of what's happening on the big picture. Where what did we just bounce off? Did we come off the daily top and we're headed to daily mid, or did we hit the daily top and we're headed to daily mid, but the 4 hour or the weekly top is actually in the way before the mid? We're finding the range of the relevant levels there, and what we're going from point A to point B, and we're finding the strength, or vice versa, and which direction the strength is. So we're putting those two things together. Then I'm going to draw fibs on the big picture so that I have that as well. So then I have that scenario on the big picture of what's going on, where's the direction is, etc. And then I can move down to the intraday stuff and look at my intraday, after I have that range, what that range looks like, where the strength is, where am I going to execute my trades, where's my target, where do I want to get in, and develop my plan off of that. But also, when I'm developing my plan off of those, I always develop my plan 2 directions, right? Like I have, if this level holds, we're entering here to this target. But if this level breaks, actually that changes everything. We're headed down here, so that when the day happens and it's going, I'm able to react based on what I've already programmed myself to react to. I'm not reacting like, oh shit, my plan didn't go how I wanted. Now what? So I plan for the entire situation, bearish or bullish, whatever's going to develop. So if you try to think about that stuff during the day, when you're just reacting and responding to everything, you're going to make mistakes. So big picture down to the small picture as far as your execution. And then when you're doing the small picture and putting those pieces together for that trade, you also want to take a look at the 15-minute algos so that you can see, where their strength is. That's tying in, right? Yeah, they buying, do you have big picture divergence that's going to work with any of the levels? And also, this isn't something that you just learn all these tools, slap them together a week later, and you understand, how to put them all together. It's equivalent to being a pilot. A pilot sits down, he has 40 different gauges he has to check when he's learning. I don't know if you've ever taken flight class, but you have to learn all this different stuff, and you have to understand all these different things. You have to check all these different things to fly. But after you've done it over and over and over and over and over, it's a glance, right? Like a pilot gets in there, boom, checks it, looks it, everything looks good. He knows what to do. It's the same principle.
Sounds
Can I
good.
ask, can I ask one quick question, please?
Yeah, I hate when you
Um,
guys ask if you can ask a question.
Well, I know you're trying to wrap up. And
No,
I don't
I'm
know if
good,
other
dude.
people have questions.
I'm good, man.
But that level 2 indicator, can you explain what
Oh, yeah.
the number, just what the number levels mean, so I know like what like what to set them to, so I know what size orders I'm looking for and stuff like that?
Well, do you understand how level 2 works first? Like, I guess
Yeah, basically, but like when you set it to 100, 200, 300, what sizes are those looking at?
it's looking at the minimum 100 size.
Just that simple?
Yeah.
Is it in
So
lots or what's the unit?
it's going to be overall. So let's see. You see, you can go like this. Watch. So we got this set to 120, 220, 35. So you can, so this is what I was telling you as far as stretching the chart out. So if I want to see the size that's happening, obviously I delete out the color for these because I don't really care about seeing those during the day, but you can see each size, right? 93, 42, 46, 48. Right here, this big one is 278.
Oh, okay.
My setting is 225, but so it's not above 300, so it's pink. So those are my medium sized ones. Down here, we have orange. Those are the master size. So look at this. This is a huge lot, 982, 964.
And what do you have your numbers set to?
So it changes for me because we have different liquidity days, but right now I've been using this same one for, over a week or two. 120, 225, and 300. And so 120 is, I have these little guys, and basically, they during the day they'll pack together and give me good insight on the range of what's above and below. They're not really the bigger players sitting there letting me know there's a big level. This is just general population more so than leaving all the minimum ones on there, because I want to look at what's going to have trouble getting chewed through, what's going to put a lid on something, what's going to put a floor on something, right? Not every level, because some levels can get chewed up by a retail trader coming and buying the size lot. I want to see where there's causes some damage, cause some trouble. And we just keep dropping, don't we? We're gonna have to trade late night one of these nights.
Yeah,
We should do that, actually. Play some
I
trades.
consider it a lot of nights. I
I'm
never
just
really
saying when
do
we
though.
when we do a class, we should do it.
Yeah, when I was doing one of those sessions the other day, I was talking through a trade and it was like unfolding as we went. It was really nice, but I didn't take it, unfortunately.
Yeah, that was a good one, Kirby.
Yeah, that was a really nice trade, wasn't it? If only I took it, you know?
So we closed outside the 4-hour and the daily. Did we
Yeah,
close?
we're hitting the daily 2.5 and we're damn close to the 4-hour 3.5 right now. So I'm worried about a slight bounce tomorrow, back
So
up to the dailies.
4405, 4390. And then there's the weekly mid. Somebody's sitting there. Daily bottoms are what? 4435. Okay, let's see if we can put this together real quick. 44 to 35. All right. Where is this? Are we below the daily 50?
I'm not sure, to be honest.
Oh, this is the 20, dude. What am I doing? That's all right. Let's just change it. Oh, it's way down here. 426.
The big things I see are 44.15, 4,400, and then 43.64. And I don't know where the weekly is.
Yeah, we're below the 200 too.
The weekly's at 43.34.
This looks like a target right here. Let's see. Oh. Hmm. No. There's got to be a fib here, dude. Do you have a fib? Shit.
I haven't fibbed out this last move yet, no.
This is, wait, let's see, maybe up here.
1.27 is already touched with that last bottom.
It did. Add this then. Well, maybe Kirby. We might go up and test that daily. Whoops.
I mean, we might not, but this is a place I see us bouncing from. If we were to.
Well, we're not going to bounce. Well, I might read.
Yeah.
Retrace.
Yeah. That's what I meant.
This is kind of getting messy, actually. What the fuck? Okay, I can see this now. Maybe we will get that bounce. We didn't hit the dailies on the way out, did we? So we haven't had a daily bear shot yet.
Nope.
Huh. We'll see in the morning. What would be nice is if in the morning we were climbing up and we hit the daily bottom. Oops. And set everyone up to think there was that we were going to climb.
Also, if you look at that 30-50 on 30 minutes, it's still over like 4 hours bottom 1.5. So that, and if you respect the price action, it has been getting rejected going up and FT50 and then getting rejected on that.
Yeah.
Could be a possibility. 440 can be a rejection, or 4435 maybe overnight.
For those of you guys that are staying to start at week 1, we'll start that next week. But also the videos are in the forums from each week too, just to recap and get ahead. Yeah, this is gonna land right in there perfectly too, dude. That could be the ideal
Yeah,
situation. We'll see
That's-
what the morning looks like though.
that's what I'm hoping for.
What else? Anything else? No?
But NQ can be different, right? And it can lead the market up or down altogether individually.
Say that again?
NQ, it can move individually by itself while we are doing the charting over the ES. Correct?
Yeah, it still sticks to the rules though. I haven't charted NQ. I used to just only trade that, but I haven't been lately. I've been trading ES since I started trading options again. To just keep the futures a little simpler. And I've felt like there's more in people's price range. Trading ES than the amount of people trading NQ, but then all of a sudden everyone was trading NQ, so I don't know.
Because you are trading NQs, everybody.
Yeah. Let's see today. Tonight, still sell volume, still dominating. And the Q is a little more balanced. All right. Anything else, guys? Otherwise, I'm gonna go hang out with my daughter.
Thank you.
Yep, cool.
That's it, man. Appreciate you.
All right. Talk to you guys tomorrow. Feel free to bug me during the day. Don't be taking trades you're uncertain of and not ask for help. All right. Good night.
Thank you. Good night.